A currency so private, even the blockchain cannot see what's happening. Every transaction untraceable, every sender anonymous, every amount hidden. Not optional, but mandatory. Governments want it banned. Binance delisted it. The EU is outlawing it in 2027. And yet, it's ranked 15th among cryptos, pushing toward $500. This is Monero, the king of privacy coins. In this video, we're covering the technology that makes it untraceable, the tokenomics with zero insider allocation, why major exchanges keep delisting it, and the exact Millionaire map. How many XMR could retire you as a millionaire? Quick thing, I've noticed most of you watching aren't subscribed yet. So hit that button, it's free, and you won't miss the next Millionaire map breakdown. Let's get into Monero now. This is not a financial advice, always do your own research. Monero launched in April 2014 as a fork of the Bitcoin protocol, originally under the name Monero. Within days though, the community pushed for a rebrand and Monero was born. The name derived from Esperanto, meaning simply coin. Unlike most crypto projects with flashy founders doing podcast tours, Monero's core developers chose anonymity. The one exception was Riccardo Spani, known as Fluffy Pony, who served as lead maintainer until stepping down in 2019. Today, over 500 developers worldwide contribute to the project, all working on an open source code base funded entirely by community donations. Here's what makes Monero fundamentally different from Bitcoin, Ethereum, or any transparent blockchain. Privacy here is not optional. It's mandatory. Every single transaction uses three core technologies working together. The first of the three is the so-called ring signatures, which hide the sender by mixing their transaction with decoy outputs from the blockchain. Imagine signing a check where 10 different people's signatures appear and no one can tell which one actually authorized the payment. Then we have the stealth addresses that protect the receiver. For every transaction, a unique one-time address is generated automatically. Even if someone knows your public Monero address, they cannot see incoming payments on the blockchain. Completing the trinity is the ring CT, or the ring confidential transactions. These hide the amount. Introduced in January 2017, this became mandatory for all transactions, meaning the blockchain shows that a transaction occurred, but not how much XMR was transferred. And on top of these three core technologies, there's one more layer, Dandelion++. This protocol obscures the IP address from which transactions originate, adding network-level privacy on top of everything else. The result? True fungibility. Every XMR is identical to every other XMR. There are no tainted coins, no blacklisted addresses, no transaction history following your money around. One Monero equals one Monero, always. And as of the present moment, in January 2026, one Monero also equals approximately $450, bringing it to a market cap of over $8 billion. By this metric, it ranks 15th among all cryptocurrencies, but there's something that distinguishes it from the rest. That's Monero's tokenomics. Broadly speaking, they are unlike anything else in crypto, and that's by design. There's a specific aspect of them that truly sets Monero apart though, keyword being fair, and I'll tell you about it in a moment. But first, let's look at the supply. In circulation, currently there are approximately 18.45 million XMR. But here's where it gets interesting. Unlike Bitcoin's hard cap of 21 million, for example, Monero has no maximum supply. Before you panic about inflation, understand the mechanism. Tail emission. The main emission phase distributed the initial 18.13 million XMR through mining rewards that decreased over time. Once that phase completed, Monero entered tail emission, a fixed reward of 0.6 XMR per block, continuing forever. Why does this matter? It solves a critical problem that Bitcoin will eventually face. When block rewards disappear, miners rely entirely on transaction fees. If fees aren't high enough, hash rates drops and network security suffers. Monero's tail emission guarantees miners always have baseline income. And what is the inflation rate, you may ask? Currently, under 1% annually and decreasing every year as a percentage of total supply. By 2040, it will be negligible. Now, let's talk about what really sets Monero apart, that one aspect I hinted at. It's the fairest launch in crypto history. Here's how the token distribution looks like. 100% to mining rewards. That's it. No ICO, no pre-mine, no venture capital allocation, no team tokens, no insider deals. When Monero launched, everyone had equal opportunity to mine. The developers who built it had to mine their own coins, just like everyone else. Compare that to modern launches where insiders often control 30 to 50% of supply before retail even gets access. For EOS seekers, Monero mining remains accessible. The RandomX algorithm was specifically designed to favor standard CPUs over specialized ASIC hardware, keeping mining decentralized. However, the landscape is shifting. Bitmain's new Antminer X9 offers roughly 1 megahash per second. That's 1 million hashes at 3200 watts, and that has the potential to change the mining economics in 2026 and beyond. We've figured out the tokenomics, but there's a giant elephant in the room that needs to be addressed in this Monero conversation, and that is the exchange delistings. Over the past 2 years, Monero has been removed from virtually every major centralized exchange. Binance delisted XMR in February 2024. OKX removed it the previous year. It's also gone from Huobi, Bittrex, and others. And the reason? The regulatory pressure. I find it ridiculous, but exchanges operating in jurisdictions with strict anti-money laundering rules face potential legal liability for listing privacy coins. Rather than fight regulators, most choose to simply delist. But here's the counterintuitive truth. Delistings have not killed Monero. They've proven its resilience. Despite losing access to the world's largest trading venues, XMR maintains a market cap of over $8 billion and continues trading on decentralized exchanges, peer-to-peer platforms, and privacy-focused services. But the biggest storm is coming. In 2024, the European Union approved the Anti-Money Laundering Regulation, AMLR. Starting July 2027, EU-based exchanges will be completely prohibited from listing privacy coins like Monero and Zcash. The regulation also mandates identity verification for any crypto transaction over 1,000 euros. What does this mean for XMR holders? European users will be forced onto decentralized exchanges, which ironically offer even less regulatory oversight. The ban may reduce liquidity temporarily, but it won't eliminate demand. If anything, it validates Monero's core thesis. Privacy is becoming scarce, and scarce assets tend to appreciate. Here's a fascinating and somewhat alarming development, though. Recent reports indicate darknet markets, the internet's underground economy, are actually returning to Bitcoin despite Monero's superior privacy. Why is that? Liquidity and accessibility. When major exchanges delist XMR, even users who need privacy face friction acquiring it. This creates a strange dynamic. Monero is almost too private for regulated markets, but temporarily losing ground in unregulated ones due to accessibility or lack thereof. What is the implication though? If Monero solves its accessibility problem through DEX growth, atomic swaps, or regulatory shifts, suppressed demand could flood back rapidly. Now, onto the risk factors with a central focus on how decentralized the project is. Well, Monero's decentralization runs deeper than most projects. In terms of network security, the RandomX proof-of-work algorithm was specifically engineered to resist ASIC dominance, keeping mining accessible to regular CPUs. This distributes hash rate across thousands of individual miners rather than concentrated mining farms. With regards to development, no single company controls Monero. The codebase is maintained by a global network of contributors funded through community donations via the Monero community crowdfunding system. There is no foundation with a war chest, nor a CEO making roadmap decisions. What about the governance then? And I came to find that changes require rough consensus amongst developers and the community. Major upgrades happen through scheduled hard forks, with the network successfully executing multiple protocol improvements in the past without contentious splits as happens in some other projects. But let's be real about the risk, and I'll go from the more moderate ones to the most extreme one that some argue has the potential to eventually shut down the project. Let's begin with the competition risk, which seems to be the least of the evils facing Monero. The major competitor here is Zcash, which offers optional privacy with regulatory flexibility. Secret Network, Oasis, and other projects approach privacy differently. However, none match Monero's track record of mandatory privacy guarantees. Many investors wonder, Monero or Zcash? So here's the head-to-head comparison. Zcash's optional model means shielded transactions stand out. Think about it. When only 10% of transactions use privacy features, those transactions draw attention. However, Zcash's flexibility gives it regulatory breathing room. Exchanges can list Zcash because users can make transparent transactions, even if some don't. Yet, for privacy maximalists, Monero wins. Its mandatory privacy means the anonymity set includes every transaction ever made. You cannot identify suspicious transactions because they all look identical. Now, moving on to the accessibility risk, which is high. Each delisting shrinks the pool of potential buyers. Retail investors who would buy XMR on Coinbase or Binance often won't navigate decentralized exchanges. This limits organic demand growth. And ultimately now, guys, the regulatory risk. That's extreme. The highest for any of the projects I've spoken of on this channel since day one, in fact. Look, Monero sits squarely in regulators' crosshairs. The EU ban is just the beginning. The United States, UK, Australia, Japan, South Korea have all increased scrutiny on privacy coins. Potential scenarios include additional exchange delistings globally, requirements for exchanges to prove coins aren't from mixing services, pressure on payment processors to block XMR transactions, and finally, possible classification as a high-risk asset requiring enhanced due diligence. And now, after we've made sure that we are well aware of the risks, let's look at the charts to see where XMR has been in order to understand where it might go. The Millionaire math on this one is pretty good, and it's coming right after our quick trip down memory lane. Monero launched in 2014, trading under $1 and remained a niche privacy experiment for about 2 years. Then, in the 2017 bull run, the price exploded from $10 to all-time high of $517 in May 2021. Over 5,000% gain, guys. Naturally, in 2022 and 2023, XMR crashed with the broader market and it bottomed around $100. The token later recovered steadily despite the listings, and in 2024 and 2025, it ranged between $150 and $400. Come December 2025, when it broke out aggressively, rallying from $380 to $500. And today, in January 2026, XMR is trading around $450. And now, the long-anticipated Millionaire math with just a few words of preamble. See, Monero's all-time high of 517 came during the 2021 bull market, before the major exchange delistings, before the EU ban announcement, before the current regulatory pressure. Despite those headwinds, XMR has nearly returned to those levels. So what happens if the privacy narrative truly ignites? Well, if that materializes to even a small degree, in comes the bear case, which, as you may know, is typically my least optimistic scenario. And the price I envision for a single XMR then is $1,000. That's more than 2x return, and we would need to buy 1,000 tokens for a total of $447,000 today. Yes, this scenario assumes Monero roughly doubles its market cap to around $18 billion, but I find that quite achievable if privacy demand grows while supply remains constrained by limited exchange access. Now's time for my base case scenario, where Monero hits $1,500 a piece. The simple math says we're in for about 3.5x return on our investment. 667 tokens worth nearly $300,000 today will see us enter the Millionaire Club in the future. According to this scenario, Monero shoots up to $27 billion market cap, approaching top 10 crypto territory. Ambitious, but not quite impossible, right? During a strong bull cycle. But that's not even my most ambitious prediction, though. Drum roll for the most optimistic scenario of all, the one and only bull case. My price target, possibly insane, $2,500. Over 5.5x increase from today's level. In that case, we grab our 400 XMR tokens in exchange for about $180,000. For context, this would put Monero's market cap at around $46 billion, roughly where Cardano sits today. This is a bullish scenario, and it requires the privacy coin narrative to go mainstream, and XMR to capture significant market share, the least likely of all three cases, but also carrying the highest return potential. After we've taken a sneak peek into the future, the biggest question still remains in the present. What breaks Monero out of its current range? Well, here are 5 potential catalysts. First, the privacy narrative momentum. Every data breach, every government surveillance scandal, every frozen bank account reminds people why financial privacy matters. You cannot deny that as centralized systems tighten control, the case for Monero actually strengthens. The second catalyst could be the DEX infrastructure growth. See, as decentralized exchanges mature, the friction of buying XMR decreases. Atomic swaps allowing direct BTC to XMR conversion without intermediaries could be a game changer that brings us closer to our dream scenarios. The third factor to send XMR to the moon is the institutional privacy demand. And what do I mean by that? Corporations and high net worth individuals increasingly need transaction privacy for legitimate reasons. That's competitive intelligence protection, security, personal safety. In these regards, Monero offers something no bank can: true confidentiality. Next up, we have the protocol upgrades. If you look at the Monero roadmap, it includes significant privacy improvements. OSPEED, which stands for Optimal Static Parametric Estimation of Arbitrary Distributions, which in simple terms makes it even harder to guess real transaction outputs. And then there's also the upgrade that involves full chain membership proofs, which eliminates the remaining ring signature vulnerabilities. And lastly, the truly fundamental, almost libertarian catalyst, the counter-reaction to regulation. History shows prohibition often increases demand for prohibited assets. My libertarian instinct tells me that the EU ban could trigger a wave of privacy-conscious users specifically seeking Monero before access tightens further. But what could go wrong? Here's 4 quick things. A. Coordinated global ban on privacy coins. B. Successful blockchain analysis breaking Monero's privacy. C. Superior privacy technology emerging from competitors. And D. Permanent liquidity constraints, which would limit price discovery indefinitely. So, I think we managed to cover the essentials on Monero here. Now you've seen the technology, you've seen the risks, you've seen the math. Monero isn't trying to be everything to everyone. It's not chasing NFTs, DeFi protocols, or metaverse integrations. It does one thing: private and traceable digital cash. And it does it better than anything else in existence. The question isn't whether privacy matters. Governments are proving that every day with their surveillance expansion. That's true. The question is whether Monero can maintain accessibility while regulators try to choke it out. If it can, the upside math speaks for itself. So what's your take? Is Monero's mandatory privacy a feature or a fatal flaw? Drop your XMR price predictions below and tell me, would you buy a coin that governments are actively trying to ban today? If you found this breakdown valuable, hit the subscribe button so you don't miss our next Millionaire math, guys. And I'll see you in the next one. Ciao.